Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Genus Power Infrastructures Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kailash Agarwal, Vice Chairman of Genus Power Infrastructures Limited. Thank you, and over to you, Mr. Agarwal.
Thank you. Good evening, ladies and gentlemen. A very warm welcome to Q3 FY22 earnings calls of Genus Power. Along with me on this call is Mr. Jitendra Agrawal, who is the Managing Director of the company, and SGA, our Investor Relation Advisors. The result and investor presentation are uploaded on the stock exchange and company website, and I hope that you all must have got a chance to see it. Our top line growth in Q3 FY22 was impacted due to reduced capacity utilization on account of shortage of semiconductors and key electronic components. However, we have secured our supply requirements for semiconductors for next fiscal year very well, and we are very hopeful and expect that a robust rebound in revenue will happen in FY23. We have recorded a sales of 196 crores for Q3 FY22 as compared to 178 crores Q2 FY22, a jump of almost 10%. Q3 FY22 EBITDA stood at 21 crore, up by 44% on quarter-on-quarter basis as compared to 15 crores Q2 FY22. Higher raw material prices and lack of operating leverage due to lower capacity utilization resulted in lower operating margins of 10.7%. Profit after tax stood at 8 crores against 7 crores in Q2 FY22. In December 2021, we received orders worth about rupees 325 crores across export geography and domestic geography. With domestic geography, orders have been received for smart meters across multiple state electricity boards. These orders will be executed in next 1 year. The impact of reform-based result-linked power distribution sector scheme can be felt on ground as almost every state electricity board have come out with inquiries and floated tenders for installation of smart meters. Few of the above tenders have been decided, wherein orders have been received by us for smart meters across multiple state electricity boards. A record number of detailed project reports (DPRs) have been filed by many SEBs in last 3 months, and we are very hopeful on the basis of that a lot of smart meters tenders will be floated and already have been floated. We anticipate a robust order inflow starting from mid of February 22 onwards. As on 31st December 2021, our order book stood at 1163 crores net of taxes, which gives us a healthy visibility for growth over next 3 to 4 quarters. I now open the line for question and answers. Please, we are ready to take the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking your question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Anshuman Ashit from ICICI Securities. Please go ahead.
Thank you for the opportunity, sir. So my first question is on our capacity utilization. So you had mentioned in your initial remarks that the semiconductor and electronic supply issue continues to hamper our capacity utilizations, and in fact has hurt our margins as well during this quarter due to low operating leverage. So what is the current level, and by when do we expect the capacity utilization to reach normalized levels, as well as the margins to reach the normalized levels?
So I'll answer this question. Capacity utilization is around 40 to 50% in the current times due to the shortage of raw material. And what we feel, the way we have done the planning in last 2 quarters and the way the things are getting normal every day, by the end of June, I would say the second quarter of next financial year, capacity utilization will start getting better, or will start reaching the normalized pace from July end.
And sir, on the margins?
And once the capacity utilization gets normalized, the margins will also get better, but previous levels or even the better levels, the margins will be from quarter 3, 4.
Sir, how has been our execution in the month of January, and how do you look at the execution for Q4?
So this quarter also, January, again, because of the shortage of semiconductors, it has been below par. It is definitely not to the levels where we used to be earlier. Even Feb March is going to be challenging. We expect it to be better than the last quarter, but not to the normalized levels. So as I said, normal levels will take at least 6 months to come to the normal levels.
Here we have to understand that if you see last quarter, we have done better in this quarter than last quarter.
Yes.
The current going quarter, we will be certainly doing better than quarter 3. Then first quarter of next financial year, we will be doing better than this fourth quarter of financial year 22. Every quarter you will see an improvement in margins and the capacity utilization. From third quarter of next financial year, we will be at a better level. That normal level we will reach by second quarter of next financial year. In margins also and revenue also, and from third quarter you will see a growth from the normal levels, before COVID levels. From the normal levels you will see the growth in margins and revenue both.
Okay. So do we maintain our revenue and EBITDA guidance for FY23? So you had mentioned in the last call that revenue guidance is of 1200 crores for FY23, and EBITDA I believe should be in the mid-teens. So do we maintain that?
Yes, definitely. Absolutely, no question about it.
Okay. Sir, how has been the tender pipeline, and how do you expect the pipeline to be in the next 2-3 quarters?
So the tenders are highest ever historically in the current stages. So if I talk of as on date, we have almost 13,000 crore tenders which are in the pipeline, out of which almost 1,800 crores has been quoted, and remaining 7,000 will be quoted in next 2 to 3 months. And even the order pipeline, if you see the industry wide, like we got some orders from Jharkhand, from some private utilities, from CESC, and we got some good order booking in last quarter, and this quarter also order booking will have some good numbers. Same way, the industry wide also you will see very good order booking. Otherwise also, like EESL, IntelliSmart, they got an order of 600 crores from Assam. So now they have come out with a tender in the market where they will buy meters from people like that. So order booking has also started from the state electricity boards to system integrators like IntelliSmart. One more company which has got one more system integrator in Andhra Pradesh has got a good order from AP board. So again, the tenders they have floated in the market to buy meters from people like that. Even the order booking from the SEBs has also started. From system integrators to people like us has also started. And Genus plays both the roles as system integrator also and as a meter supplier also. So we are getting orders for both the works.
Sir, could you please put a number on what has been the order in the total amount of orders till January, and how much have we participated in and how much have we won for FY22 till date?
Right now we don't. I don't think that we have the right numbers.
Yeah, I don't have the data.
So basically,
Okay.
Here you will see that opening of 1st October, our order book was around 900 crores. Now the opening for 1st January is around 1161 crores. So every quarter you will see that order book is building up. So this year it is higher than last time. It's almost 300 crores higher than last opening. And next quarter you will see that it is far better than this. And order has started coming in the market. They basically say Genus has not got order, but the orders have come in the market. Like ESL has got an order from Assam. Like one system integrator has got order from AP. Now they will buy from the market. So the flow of order has started coming. So Genus will also be winning very soon any big order or like that.
Okay. And sir, on our recent win of 325 crores, has the increase in the commodity prices been incorporated in those? And in among our order book, which we currently have of 1100 crores, what is the composition of the legacy orders in which the price increase hasn't been incorporated?
So almost 75% is the legacy order. In all the new orders which are coming up, definitely we have taken care of this price increase.
Okay. And this 75% will be executed over the next 2-3?
Over the next 8 to 12 months, most of these orders will be executed.
Okay.
Sorry, JK, 75% is not the legacy orders, or 25% is the legacy orders. And 75% is the new orders. I think you have got confused with the question.
What I understood from the question is what they want to ask is how many orders have been quoted the increase of the raw material.
Yes. So basically 25% is the legacy orders, but not even 25%. 20% hardly will be the old orders. Now these all are the new orders out of 1162 crores. And
yeah, of course,
the price increase has already been taken care in this.
So in the 75%.
Legacy is not there. Hardly 15-20% legacy is there.
Okay. Understood, sir.
Yeah, so you misinterpreted the question.
Okay.
Shall we clarify this?
Yeah. Okay, sir. Okay. Sir, how much has been our exports in FY22?
FY22 exports will be not very much. It will be around 30 crores, 35 crores. Now we have a good order book of export supply. Out of this 1162 crores, around 156 crore is from exports.
156 crores is exports. And sir, could you give the breakup of the order book in terms of how much is smart meters, conventional, FMS, and if it's possible?
So now, currently the order book 90% is smart meters. Remaining 10% is conventional. So more or less, whatever the new orders we are booking is mostly smart meters.
Okay. So next question is on the production ramp up. So recently in our interaction with the ministry as well, they have said that while the implementation of the new revamped scheme is under process, it will start from April, but there may be a case that the supply of meters may be lower than what the demand is. So are we looking at enhancing our production capacity anytime soon?
We have been maintaining this in the past also, that as an industry, we have enough capacity to take care of the requirement, and enhancement of capacity for a company like Genus, because we are so well vertically integrated. Currently, we have a capacity of 10 to 12 million meters annually, and to reach to the level of 16 to 20 million annually is a matter of 3 to 6 months for us. So what I believe is that from next calendar year onwards, we should be in a position where we are able to do our 100% capacity utilization will be there, and we can add on to our capacities also. So what we have planned internally is from May, June onwards, looking into the way the industry is moving, we'll start working on our capacity expansion if required.
Okay. Okay, sir. And so one last question before I fall back in the queue. Sir, on the SBD which has been recently released, so could you just highlight what are the key differences in this SBD compared to the tenders which have been floated earlier, and how has been the response from the states in terms of adoption of this SBD, and has there been any recent tenders which have adopted this SBD, incorporated this SBD in the tender?
So nowadays, mostly
the tenders which are coming in the market are according to this SCD only. And one good thing what they have done is that they have given some leeway to the state electricity boards where they can do some modification according to their local requirement. And one good thing what they have now proposed in the SBD is even the billing, up to the billing and even from the bill generation can be taken care by the system integrator. Their emphasis is very clear that once bill generation and even to an extent where in some of the state electricity boards, they are talking even the bill collection can be done automatically using these prepayment meters so that the system integrator money is even more secure. Whatever the first flight of amount remains with the system integrator so that they never face any problem of receiving the money. So these are some of the very positive changes which are brought in the current SBD, latest one. And most of the tenders which have come in the past or currently ongoing, some amendments are being made according to the new SBD. And not a single tender is there which is beyond SBD nowadays.
And so this includes the tenders from the SEBs as well?
All the tenders are coming from SEBs only.
Okay.
SBD is designed by the MOP in consultation with the industry and stakeholders from SEB.
Yes.
And tenders are using these SBD tenders are bought by state government.
Yes. Okay. Thank you, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Mohit Kumar from GAM Capital. Please go ahead.
Yeah, good morning. Good afternoon, sir. So two questions, sir. First is, do we have any plans to tie up with some system integrator to bid for all these, upcoming bids? Because this is expected to be a very, very large opportunity. Won't it be wise for us to, tie up with something like, a power grid, which is, I believe, is, trying to bid for almost everything now?
Power grid has still not done a single bid to any of the system integration tenders. Now the government of India, MOP, have asked them if they want some work on nomination basis. And once Power Grid gets some work on nomination the way EESL got, they will come out with the bids and they will buy meters or maybe end-to-end solutions from people like that.
So is there any chance, is there any, is there any strategy to tie up with some of the, large system integrator to bid for these bids?
So we,
from the state?
As a meter manufacturer, we are working with almost all the system integrators who are working in the country. So I'm unable to understand what exactly you mean by what.
So my question is whether, let's say the opportunity of 10,000 crore next year, correct? We can do limited from our own balance sheet, right? So part of so maybe somewhere we'll participate through our own, somewhere participate through a system integrator. I'm just trying to figure out, is there any way to tie up with the system integrator before the bidding?
Currently, we are doing the same strategy only according to the bid, according to our need of the bid. We are making the participation. Like in Andhra, the system integrator, we are working with the system integrator. We were very clear that we are not quoting directly. In Assam, we quoted directly also, and EESL also quoted, and we are using our meters in the bid. So all kind of strategies are being worked out in the market. So it's a very and Genus has a very flexible approach. We are working with system integrators as their suppliers also, and we are also doing some of the projects directly.
What is the appetite for doing the system integration work in terms of, amount which you can do in a year?
Whatever we can do directly, rest we will go for system integration.
Sometimes I figure out, is there any capital allocation strategy?
Saying that we have to take on our balance sheet. So obviously we will not be taking too much of leverages on our balance sheet. So remaining will be surely for the system integrators where we will be supplying the meters.
And so how is the competition in the system? Has it increased? Is it increasing given the expected large opportunity? Of course, it has not materialized as of now, but FY23 could be a very, very big year for the entire industry.
Competition will always be there. It is there. But the important part is how well you are prepared for the competition. And
Right.
fortunately, Genus is sitting on the sweet spot where they are preparing themselves, they have prepared themselves, and they are very well prepared to take onslaught of any kind of competition.
And so out of 5,000, 6,000 rupees per meter, what portion of raw material is getting imported for us?
So the imported raw material, what do you mean by again?
Still, let's say out of 5,000 rupees per smart meter, which is generally the price cost of the smart meter. What portion is this will be imported from China or any other geography for building the smart meters?
So in general, the meter 60-65% of it's a domestic content. So we are a truly made in India product. We have a very large domestic content. International component is to the tune of 25 to 30%. Sometimes it goes up to 35%, not more than that.
60% is the raw material cost. You can take it like this, that 60% is the raw material cost. And of that 60%, 30-35% is the imported cost.
And is there any PLI scheme in the offering for smart metering, sir? Is there any talk of,
No, there's no talk about it.
Okay, understood, sir. Thank you and all the best, sir. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Shantanu Chatterjee from Mount Intra Finance. Please go ahead.
Good afternoon, sir, and thank you very much for this opportunity. So my first question is, what are the steps we are taking to negate the effect of raw material price rise if it is carries on like this? If there is any kind of possibilities to introduce price escalation clause in the new contracts?
No, there is absolutely no possibility. There is no price escalation clause in the SBD, and I don't see that happening.
And what are the strategies we are taking, sir, to negate this price rise?
So the strategy we are taking is very clear. We have understood. We have been seeing this market from last 2 decades, and it's not that for the first time this kind of uncertainty has come and so much of has happened. So it is two-way also. Sometimes we get benefited, sometimes we lose because of this, because all the contracts in metering industry has always been a fixed price contracts. So we have been benefited, we have lost sometimes. So that makes that averages it out. And whenever we are quoting a tender, we see 12 to 18 months of the picture before we make a quote to the tender. Not only for us, it is for the whole industry. So that is how it is going to happen.
Okay, sir. And my second question is, sir, in your current presentation, in the page number 29, you have mentioned that India can save up to rupees 9.5 lakh crore by investing rupees 1.25 lakh crore for replacing 25 crore conventional meters with smart meters. What is the calculation behind this, sir?
The calculation is pretty simple, that 1 lakh crore rupees are lost every year. This is the data, and this numbers we have taken from the data of EESL. So because they have done the whole study, and along with them as an industry, and we have also done that study. Every year we are losing 1 lakh crore rupees in the name of theft in the country, which will be significantly lower once use of smart meters is into play. And the life of all these projects are minimum 10 to 11 years. The life of a smart meter is minimum 10 to 11 years. This is how we have calculated, and plus the consumption of energy is increasing every year by 8 to 12%. So these are the 3 broad numbers which are taken into consideration while making this calculation of numbers.
Okay, sir. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Suresh Navandhar from Sampada Investments. Please go ahead.
Hi, sir. Good afternoon. So my question was on our order book. Out of the total order book of right now, 1,100 crores around, how much of it is on the OPEX model and how much of it is on the TOTEX model?
So currently our order book is all TOTEX. Primarily CapEx, not even total.
Okay. So we are just supplying.
Now we have not taken any OpEx orders.
Okay.
Some of the orders has FMS built into them, but mostly they are all CapEx orders.
Okay. And second question is on the raw material prices. Let's say tomorrow if raw material prices go down, we will get the extra benefit of it, right? Because right now we are bid on the higher raw material prices, and tomorrow prices go down, then we'll get the extra benefit, right, on it.
Yes, because these are fixed term contracts. We lose, we gain.
Okay. Thank you, sir. All the best.
Thank you. The next question is from the line of Rajiv Rupani, an individual investor. Please go ahead.
Good afternoon, sir. I had a question. See, in the month of May, you had told that the order book is 931 crores, and now our order book is 1163 crores. So basically, it is increased only by 230 crores. And that time, you had informed us that 7,000 crore tenders will be decided in the next 35-40 days, and tenders worth 10,000 crores will be decided in 6 months. So, I mean, are those tenders not decided yet, or what?
Most of the tenders are not decided yet. There have been multiple reasons to this, and of course, COVID again added to the agony, which is very unfortunate. So none of the tenders, two good things what we have to understand. None of the tenders have been scrapped. Customer is also very clear that they have to go for these meters. Smart meters, decision has started ramping up. So whatever currently the order book Genus has majorly, not only Genus, all other smart electricity metering companies, most of them, the order booking is of the smart meters, because most of the electricity boards are now deciding on the smart meters. Most of them have stopped or reduced their buying of conventional meters. All the budgets they are making are according to the smart meters purchase only. All the tenders which are coming up, which are being quoted or will be quoted in next 30 to 60 days or 90 days, they're all mostly smart metering tenders. So good part is none of those tenders are scrapped or anything like that has happened. But yes, things have got slow, unfortunately, because initially the DPR dates were to be till October. Government extended it till December because most of the electricity boards wanted extension. Most of the DPRs have been submitted, but the onslaught from December, January again slowed down things at the SEB level. These are all unfortunate facts, but I think things will get normalized within Feb itself. Most of the state electricity boards are fully operational, so we don't see any much problem of COVID also in our. So Feb, March onwards, a lot of these decisions will start happening.
Okay, and I had a follow-up question. You had informed us in last Concall that by 31st October, state government have to respond to the central government regarding smart meters. So could we have an update on that, please?
So by 31st October, the DPRs were to be submitted, which are extended up to 31st December. Almost all the states named, Maharashtra, Rajasthan, Telangana, almost everybody, Tamil Nadu, Kerala. There's not a single state which is not giving DPR. They have their own queries. Again, some meetings happened between MOP and the state electricity board, individual SEBs. A lot of meetings are going on decision of these RDSS SBDs. So things are in the right direction. This is what I can say currently. And a lot of tenders are being out in the market.
Okay, and my last question is regarding gas meters. In the press release, you have mentioned that you have received orders for gas meters. So could we have an update on that?
Yes, gas meters also is taking a very good traction. And I'm pretty hopeful that next financial year, our gas meter business will also see a significant jump, and it will show some good numbers. We recently got orders of gas meters from 2-3 different utilities, which is a very good sign. We are the only company in the country which has received BIS mark for the gas meters. Though it is not compulsory in the country, we are asking the government and the utilities why it is not compulsory. When electricity meter BIS is compulsory, it should be compulsory in gas meter also, which is even more, I would say, related to safety. It has even more safety reason. It should be BIS mark. So also you will see Genus doing a very, very good job from next financial year. We have made a very strong base in this financial year.
No, so what is the order book? Could you tell me the order book for gas?
Currently, we have orders of around 30 crore rupees for gas meters.
Okay, thank you. Thank you.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Vishal Prasad from VP Capital. Please go ahead. Vishal Prasad from VP Capital, your line has been unmuted. Please go ahead with your question.
Yeah, thank you. Good afternoon. So I have a few questions. I understand we haven't won the CapEx plus OpEx model until now. But sir, could you probably spend 2 minutes to explain the modalities of the contract, CapEx plus OpEx? So how does it work? What how does the payment work? How are the capabilities of different vendors is taken into consideration while giving the contract?
So I think what I have understood is we are trying to understand how this SBD will work on this TOTEX model which the government is coming out with. Is that what I understand?
Right.
So the TOTEX model is very simple, that mostly as a system integrator, we have to make a bid of per meter per month, in which we have to maintain for 10 years. 2.5 years are given for the installation, 7.5 to 8 years are given for the maintenance. So total for 10 years, the whole project will be under the system integrator, where the system integrator will do the end-to-end job, from installation of meters to maintaining the daily SLAs, monthly SLAs, and quarterly SLAs. Everything will be done by the system integrator. SLA means service level agreement, which will be done between the electricity board and the system integrator. And mostly the system integrator will be paid per meter per month. So this is how this whole system will work, and from not only the meter reading, billing, and in some cases they are even talking of collection. And everything online, prepaid meters, even the collection mechanism, everything is maintained by the system integrator. So the end-to-end solution of metering will be taken care by the system integrator, which is what EESL is doing currently in, I would say, UP, Haryana, and some of the blocks. So this is how this whole system is going to work.
Okay. So, based on the last few calls that we have done, so I understand there are 3 parts to the CapEx plus OpEx model. One would be the meter price, second would be the service part, and last would be the software. So for a typical contract where we have 8 years of services, so how would be the pricing divided? What part will go to the meter cost, what will go to the software, and what would go to the services cost, yearly services cost?
So how you will have to divide it is, I'll just give you very quickly. So the meter and the software, we will say these are your immediate CapEx cost. And then it is the maintenance for next, then it is installation, then it is the maintenance. And mostly it is every maintenance is going to happen online, because these are all online meters where you will have to maintain them. So if you will divide them as a CapEx to any system integrator, 50-60% of the money will go in the meter and the software initially, and then remaining 40% will be on the OpEx over the period of 7 to 8 years.
Okay.
Everything else will be covered.
So 60% is still the installation of the meter, you can say like that, and 40% is then the services that has to happen for the 8 years.
Okay, so generally, based on our experience, I understand smart meter is not that old, but what would be the expected life of a smart meter?
Minimum 10 years.
Okay, so we should be able to...
all these projects are 10 years projects, so the life has to be 10 years.
Okay, so if anything goes wrong within those 10 years, we have to replace the meters.
Of course. If
Okay.
anything goes wrong, we have to replace the meter.
Okay. And you talked about our model where we are, in some of the contracts, we are trying to become the system integrators, and in other places we are trying to partner with some other system integrator and bid for the contracts. So I mean, internally we would be having some criteria based on which we decide, okay, these are the contracts where we will become the system integrator. So could you elaborate on those criteria which help us decide us becoming the SI for a particular contract?
So the biggest criteria what we have internally is the situation of that electricity board. And since we are deep rooted into electricity boards in the area that we have been working in this from last 2 decades, so that becomes a very important criteria for us to decide. In this, we are going as a system integrator. No, here we will not focus as a system integrator. We will only go as a data supplier.
Okay, so irrespective of the payment from the electricity board to the SI, our payments are secured by the SI, is it? I mean, if we are partnering with somebody else?
In the SBD, payment is absolutely secured to the system integrator also. Unless he is not doing his work correctly, if he is not meeting even the 95% SLA. This is the problem of the system integrator. Otherwise, the money is fully secured to the system integrator also. Okay.
So typically these electricity boards, so I mean, I understand there would be multiple SIs who would be bidding for each of the contracts. So what are the criteria that they use to select the SI? I mean, is it totally based on the lowest pricing or is there something else?
There's a full technical qualification document, sir. Every tender comes out with a huge technical qualification criteria, and only once you qualify in the technical qualification criteria and you commercially satisfy all the conditions, then only the price bid is open.
Right. I mean,
you bid the tender and your price bid will get opened.
No, yeah, sure. So my understanding would be there would be, I mean, more than one SI who will qualify through all the technical requirements. So let's say there are 3 or 4 who qualify. So the final decision is based on lowest cost, or is there something else?
Yeah, final decision is lowest cost.
Okay.
But there are full technical qualifications before accepting the lowest cost. And also in some of the cases, like just to give you example, the case of Jharkhand, where we became L1 and we have got the order. It's not only on the lowest price, it is also on the quality cost based system. So in a lot of tenders now QCPS is also getting is also coming in the tenders as a criteria, which is very good for companies.
Okay. Last question, sir. So if we have to compare our meter and our capabilities in software with our competitors, so let's say for example, L&T sold it to one of the multinationals. So could you elaborate on what are the advantages that we have with respect to our multinational competitors, and what are the areas where we are lacking and we will still have to catch up?
Currently, Genus is the only company which is providing end-to-end solutions. I don't say the others are not capable of providing that, but they are still little behind us in providing end-to-end solutions in the current state of affairs. And we are probably the only company which is working in all the communication sphere as a company, and we are. So I think technically, if you want to compare with Schneider, we are much more vertically integrated in comparison to Schneider. I don't say that these are not good companies. They are all very good companies in good competition. But currently, when it comes to smart meters, we have little edge over there.
Okay. Thank you, sir.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Nikhil Jain from Galaxy International. Please go ahead.
Yeah, thank you for the opportunity. I just wanted to ask, so the software part of the solution on the OPEX model, we do it in-house or we take it from somebody else and we procure it?
So currently we have both the strategy. We are doing some work in-house also, and we are also outsourcing some of the work. So both strategies are being worked out currently.
Okay. So which is the one that we are preferring? So our software solution is also, let's say, approved and can be used, or? Because if ours is approved, then why are we actually taking from outside software solution?
So it's not that the only one kind of software or one kind of solution is required. So it is the multiple solutions which are required. And in some of the places we are using our own solution. In some of the places we are using the solution as demanded by the customer. So both strategies are being worked out. We have our vendor base also, and we use our own product also.
Okay. And second thing is that in one of the earlier calls, you suggested that there are something like 90 to 100 people who are working in the R&D side, who are working in doing the development work for the smart meter. So if you can just give a little more idea about what they actually do and what's the value add that is coming in from there. How is it different from, let's say, a commodity kind of a product, right, that's available off the shelf? So based on the work that the team is doing. So if you can just give some perspective, that would be very helpful. Thank you.
So meter being a very custom-built product, which needs a lot of customization according to the customer requirement. And the way that, just to give you a simple example, like I'm doing a smart meter project, let's say in a city like Jaipur. So in a city like Jaipur, when you're doing a smart meter project, the end customer is concerned about the SLA. He is not much concerned how you are going to get to the data. So for him, the most important is to meet the service level agreement. When we get into the, let's say, and we are currently working in Jaipur. What we are seeing in Jaipur is we are using all the technologies. Some places we are using RF for the communication. Some places we are using GPRS. The Genus has the capability, looking to the condition of the geography. We can change into, because we are vertically integrated, we have our own design. We are not dependent on designs of the product. So these R&D engineers, they are primarily, because we have a very strong R&D and we have almost 300 engineers in the R&D, not 90 to 100, just to give you a perspective. So we are very solid in terms of R&D, and it's not only, and when we talk about smart meters, it's not only hardware, there's a lot of embedded software which goes into this. It is the only electronic product in the world which has an electrical application. This is where people have to understand is smart meters or electricity meters could never become commodity and will never become a commodity. I'm confident about it. Reason being, it's an electronic product which is an electrical application, plus the reliability of this product is like there's no electronic product in the world which has to work 24/7 full time. So this is, and a lot of application software has been added because of the smart meters end-to-end solution provided. So that is where the R&D brings in a lot of customization, a lot of solution that gives the edge to companies like us. I hope I'm able to answer what you wanted to know.
Okay. Yeah, that's helpful. Thank you. So just if I can just squeeze in the last one. So basically, I just wanted to understand. So when we reach, let's say, the full capacity utilization, let's say 100% by Q3 of the next financial year. So, and given that our now the order book is tilted towards a smart meter, 90% smart meters or 85%. So what would be, let's say, a margins TOTEX model on a, let's say, some guidance on the margins when we reach a high capacity and through smart meter, because I presume that the smart meters will have much better contribution margin as compared to the earlier conventional meters. Yeah.
First of all, I would like to clear that that's not a 100% capacity utilization. Earlier also, we are saying that from third, fourth quarter, we will be reaching to a pre-COVID levels. That was 55-60% utilization. So once we will reach to 100% utilization, our turnover will be more than 2,000 crores. So basically, that you have to understand. JK, now you can continue.
Yeah. So by Q3 and 4, once we reach the normal level of our capacity, what was pre-COVID level, so from Q3, Q4, we expect our EBITDA to be in the range of 16 to 18%. It will be pre-COVID levels or even better.
Yeah. So I was just presuming that it should be better than what it was earlier, because the component, or let's say the percentage of smart meters has gone up in the overall order book, and hopefully the pricing will and the price of the raw materials and all will also come down, so that will not have an impact and can increase that.
Even I'm very hopeful it should be better.
Effect of any price down of raw materials. So there will be, secondly, if there will be a price down, we will be getting more better margins.
Advantage of it.
Yeah. Sure. Okay. Thank you.
Thank you. The next question is from the line of Anshuman Ashit from ICICI Securities. Please go ahead.
Thank you, sir, once again. Sir, can you please tell us what is the quantum of FMS in our order book currently?
Often I don't have the numbers. I can send it to you.
Okay. Okay.
After the call, SDA will send it to you. That's not a problem.
Okay, sir. And sir, we have received the order from NCLT regarding our restructuring process. So could you please give some details on where the process currently stands at, and by when do we expect the whole process to be completed and the other entity to be listed, Genus, the other entity?
The shareholders meeting has been called. That is in the end of the February. So once that approval will come, then we will file the second motion in the NCLT. And I think after filing the second motion, NCLT might take 2 to 3 months. So I'm very hopeful that first quarter of next financial year we will be over with the process.
Okay. Okay. Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Vidhi Kothari from Kothari Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. I had a couple of questions. So the first question is that how much order inflow can we expect in quarter 4 of FY22 and FY23?
Quarter 4.
Quarter 4 of this financial, the current quarter.
Quarter 4 of this financial year
and FY23, financial year 2023.
So order inflow in this quarter, in terms of numbers, maybe it's very difficult for me to comment right now because a lot of tenders are in the pipeline. They may get decided in next 15 to 30 days because sometimes because of the March and they do spill over to April, May. So exact numbers is very difficult to be exact. So I don't want to state any number because I'm not 100% sure.
Okay, sir. So my next question was on the smart meters. Our smart meters are likely to constitute how much share in our order inflows going forward?
Going forward, the smart meters are going to be 85 to 90% in the order inflow.
Okay. And sir, you have mentioned of much improved performance in FY23. So how much top line growth and operating margins can we expect in the next financial year?
So next financial year, as we said earlier also, we are sure of touching 1,200. This is the guidance we gave last time also, and we maintain the same guidance. That 1,200 plus we expect to do in next financial year with a EBITDA of pre-COVID levels.
16% to 17%.
Okay, thank you, sir. That was useful.
Thank you. The next question is from the line of Isha Savla from Arya Securities.
I can take the last question, please.
Okay, sir. We'll take one last question, which is from the line of Isha Savla from Arya Securities. Please go ahead.
Thank you for the opportunity, sir. Sir, could you please provide an overview of the current status of Indian metering industry implementation roadmap of new distribution reform scheme and how you see the industry evolving over next 1 to 2 years?
So the overview is simple that the industry is evolving depending from conventional meters, electronic digital meters to smart meter. And government mandate is very clear and most of the state electricity boards mandate is very clear that yes, smart meter has a big benefit to their revenues and in future we are going to go about that. And government of India has also given a lot of incentives to the state electricity boards for implementing smart meters. So the future is very clear that most of the metering in the country is going to be smart metering only. And an ambitious plan of government. They are ambitious of changing 250 million meters in the next 4 years, but yes, definitely won't happen in 4 years. It's not easy, but we have 6 to 7 years. This will surely happen. This is the clear mandate, and this is visible also. And industry is pretty well geared up. So the industry is geared up, the stakeholders are geared up. So future looks to be very good.
Okay, sir. Good to know that. Sir, as you have mentioned that there will be multiple jump in the Indian metering industry, can you provide a ballpark figure of annual revenue size of the industry?
So currently our industry hovers around 3,000 to 3,500 crores, mostly if you see last 4-5 financial years. So this industry size will definitely, I am confident that this will go up by 2 to 3 times at least.
Okay, sir. That was helpful. Sir, going forward, can we expect the company to maintain its current 25% market share post the multiple jump in the size of the industry?
To be very frank, we are very confident. This is the way we are working internally. We have our target that whatever the conventional meters, Genus has the largest installed base of conventional meters in the country. And internally, we have our target that not a single meter should be, a Genus meter should be changed to a Genus smart meter. So I'm pretty confident that yes, we'll be able to maintain our market share in the times to come.
Okay, good to know that. So I have just one last question. That what impact will the new distribution reform scheme will have on our operating margins and on our working capital cycle? Can we expect much improved performance on both the fronts? Can you shed some light on the same?
So as dealers, once we start supplying to system integrators, definitely our payment situation improves, working capital improves, because most of the system integrators you supply with a very secured payment terms. Same way, once as Genus, we are becoming system integrator also in some of the projects. The payment terms of the government is pretty secured. So working capital requirement in terms of numbers will surely increase because your business is also increasing, but in terms of number of days, it will surely increase.
Okay, sir. Thank you so much.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I now hand the conference over to Mr. Kailash Agarwal for closing comments.
Thanks a lot, ladies and gentlemen, and we surely assure you that the company will be doing very good, and the coming time is very good for the company, seeing the market, seeing the condition, and the government inclined towards the smart metering. Thanks a lot. Thank you very much.
Thank you, everyone. Be safe. Thank you.
Thank you. On behalf of Genus Power Infrastructures Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.